Palantir stock has started to sink again, and the reasons stretch across the entire artificial intelligence sector. When trading reached the early afternoon on Wednesday, the company's share price was down about 4.3%. Earlier in the day, the drop reached about 5.5%, so the pressure built up quite early. It helps to step back and think about the bigger picture, because many traders are struggling to decide how to place a value on artificial intelligence companies right now. When investors become unsure, they often sell shares simply because they want to be cautious. That general debate is part of what is hurting Palantir. The other part comes from momentum flowing toward another artificial intelligence company in the defense space, and this has caused some traders to rotate their attention away from Palantir. This shift might sound small, but changes in sentiment can snowball quickly. As we continue looking at the situation, some people believe in the company and hold their shares for long stretches of time because they trust that artificial intelligence software will reshape huge industries. Those long-term supporters have earned very strong gains. On the other hand, many people worry that the valuation reached a level that could easily burst. The share price is now down 12% from the highest point it reached earlier this year, which adds to the feeling that it may have climbed too quickly. Another important piece of news involves Michael Burry. He runs Scion Asset Management and became well known for predicting the housing crisis. His fund placed negative bets on Palantir, and once traders heard this, some became more nervous. When a well-known investor bets against a company, many people follow simply because they assume he sees something they do not. At the same time, a smaller artificial intelligence defense company named Big Bear has captured new attention, and that headline pulled a lot of investors toward Big Bear. The company had just revealed its Q3 report on Monday, and the stronger results caused an immediate burst of new buying. As interest shifts from one company to another inside the same field, momentum changes and investors begin comparing potential gains between the choices. Even with all this turbulence, it is important to remember that Palantir remains a high-quality business. Revenue climbed 63% year over year, which is a very strong pace for any company, especially one that is already well known. Adjusted earnings reached 21 cents per share, which beat the average expert estimate of 17 cents per share. These results show that the demand for Palantir software continues to rise. However, this strength brings up a more challenging question. Investors now wonder how long the company can maintain such rapid growth and what risks might appear over the next several years. When a company grows quickly, expectations also grow quickly, and the share price becomes sensitive to even small disappointments. This creates a situation where the company can still perform well, but the stock might move sharply because expectations are so high. When we put all the information together, we see a clear picture. Palantir remains very expensive according to common valuation measures. The company trades at roughly 292 times expected earnings and about 98 times expected revenue. These are extremely high levels, so the valuation depends heavily on continued strong growth. After the recent pullbacks, the stock is still priced in a way that leaves little room for slowing momentum. Even with that said, there are reasons to stay optimistic in the long run. The company has unique software, strong government relationships, and growing interest from businesses that want to use artificial intelligence. I believe Palantir can reward patient investors over many years, although the share price may continue to swing up and down sharply because the market is trying to figure out how to value companies in this fast-moving field. This kind of short-term volatility can be uncomfortable, so it helps to stay focused on the bigger picture and avoid reacting too quickly. If you're watching Palantir, it is important to remember that the artificial intelligence sector is still in the early stages of its growth cycle. As more companies and agencies adopt artificial intelligence tools, the demand for Palantir software can continue to expand. There will be moments like this when traders step back, question valuations, and shift attention toward other companies. These moments can create downward pressure even when the underlying business remains healthy. Understanding that pattern makes it easier to stay calm when the share price moves sharply. As long as Palantir keeps improving its software and signing new customers, the long-term story remains strong. However, in the near term, it is realistic to expect more fluctuations, especially as investors try to compare Palantir with every new artificial intelligence competitor that enters the scene. The key idea is that the company is still building something valuable, but the stock price will continue reacting to changes in sentiment, headlines, and competition. Essentially, Palantir is experiencing a noticeable drop in its share price because many investors are rethinking how to value artificial intelligence companies, and this uncertainty has pushed Palantir down harder than the overall market, while attention shifts toward a smaller defense-focused artificial intelligence company named Big Bear that recently reported strong Q3 results. At the same time, Palantir remains a company that creates strong disagreement among investors because long-term supporters see a powerful future, while others fear that the valuation has climbed too high, especially since the share price now sits 12% below its highest level from from earlier this year, and sentiment has weakened further after news surfaced that Michael Burry placed negative bets against the company. Even though Palantir delivered very strong Q3 results with revenue rising 63% year over year and adjusted earnings reaching 21 cents per share, compared to the 17 cents expected by experts, the company still trades at extremely high valuation levels, which creates more short-term volatility as investors debate how long its rapid growth can last. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.